Hi, before we get on with our interview with Toby Chapman from OC&C Strategy, a word about our sponsor, PropTex. Now, if you've read opinion and analysis articles that I've written over the last 5 years, you'll know that I feel quite strongly that real estate portals should be a bit more innovative. Now, how do they do that? How do they go about that? Well, one way to do that, one way to up their product game might be to talk to our sponsor, PropTex, who do all kinds of really cool things around renovation estimates, virtual staging, in listing furniture shopping, all things like that, all things that I have been asking real estate portals out there to build for their audience for years. If that sounds good, head to PropTex, that's with 2x's.com, or hit the guys up on LinkedIn and we'll obviously say that we sent you. Hello and welcome to the PPW Pod, bringing you news, views and interviews from the world of real estate marketplaces and PropTech. My name is Edmund Keith. I'm the editor of onlinemarketplaces.com, joined by Simon Baker, who's got up bright and early for this one. How are you, Simon?
I am incredibly excited to be talking to Toby today. It was certainly worth getting out of bed at 5 a.m.
Excellent. And we're joined by Toby Chapman from OC&C Strategy. How are you, Toby?
Very well, thanks, Ed.
For those who don't know, what does OC&C do and what is your specific role there?
I'm a partner at OC&C. It's a strategy consulting firm with offices all over the world. I guess we do a whole bunch of different things, but for the purpose of this conversation, we do a lot of work in consumer internet and online marketplaces. And Simon and I have known each other for many years. I've been lucky enough to speak at a few of his conferences. Property portals is an area that I specialize in, have been working in for the last 17 years with a team of us at OC&C. We tend to do, about half the stuff we do is transaction support, so helping portals with IPOs, helping private equity firms do due diligence on different portals and marketplaces around the world. And then we also work with the companies themselves on growth strategy, diversification, entering new markets, all sorts of different topics.
Okay.
Sorry, one second. IPA? What's IPAs?
IPOs, sorry. That's
IPO, sorry.
That's
That
my
English accent always throws me.
Confusing you. So when
IPO,
when Hemnet did an IPO, for example, we worked on that. Same with Praxui in Poland in the job space. And
I think actually
in the dating app space, we did their IPO as well.
Okay, so I think it would be good if you could just give us an idea of something. I don't know who you can name or can't name as a client, but if you've got some sort of headline names that you can throw out there, that would be good, just so people understand the breadth of what you guys do, geographic wise, and also the quality of what you do. That you mentioned Hemnet just then, so top quality stuff.
Yeah, sure. So we work with a lot of the global PE funds. Obviously, this has been an area which has been hugely popular with PE firms. So we work with most of the big names in that space that have been investing in businesses over the last sort of 10, 15 years. And then on the corporate side, we work with REA, for example. We can talk about some of the sort of work we've done. For example, we helped them out with the diligence they did on Rightmove last year. We've worked with people like Car Gurus and Auto Trader in the past. We've worked with Adevinta. We've worked with Schibsted. Whole load of national champions across Europe and the rest of the world, and also some businesses in more emerging markets like Middle East, like parts of Asia as well. So a really broad range of businesses. Property portals, absolutely front and center, but also car portals, C2C, used goods platforms, dating apps, e-commerce sites, any type of online marketplaces, from the sort of traditional classified sites, which we're going to be talking about mainly today, I suspect, all the way through to lots of weird and wonderful niches like pet sitting and all sorts of other marketplaces.
And what kind of percentage of your time is spent looking at real estate marketplaces versus kind of these other more niche things? And would you say that, I don't know, the real estate marketplaces are less interesting, more difficult, less difficult than some of these other spaces that you look at?
For our team in consumer internet, I think there's a bunch of us who do work in property portals, and for that team, I'd say probably 20 or 30% of the time is property portals. That's probably decreasing over time, just because there are so many other types of marketplaces that are getting to scale, that are starting to use consultancies, that are starting to be, investment targets, IPO opportunities. So we are certainly diversifying far beyond the sort of classified marketplaces into lots of different categories.
And how about, so are real estate marketplaces within your team kind of thought of as, oh, that'll be a fun business to look at? Or is it kind of, well, actually, no, real estate marketplaces, we know how they work. They tend to be a bit kind of cut and paste, a bit boring, let's say, compared to autos or pet sitting or any of these other kind of spaces?
Obviously, it's great to have a variety, and I think there are really useful read acrosses that you can learn from different marketplace categories. So there are things you can learn from dating apps that could apply to car portals and all sorts of things across this industry, which I think is what makes it fun, being able to work in lots of different categories. Certainly, I wouldn't say property portals are boring. I mean, investors obviously famously have been very keen on them over the years because they do have some characteristics which make them really resilient through market cycles. Even though property is a super cyclical underlying market, the property portals tend to do really well. And also the strong number ones that you have across the world, as Simon knows better than anyone, are also very sort of competitively resilient as well. So that has made them super attractive and successful businesses.
Okay, you said that you worked, you name dropped a little bit, REA Rightmove deal. I'm really obviously very interested in that deal. The union ended up not happening, as we all know. How close did it come to happening? Was there, it seemed from the outside like it was a non-starter from the beginning. Was that your sense all the way through it? Or was there a point where it might have happened?
I obviously am not close to we did the due diligence work with them. I think I can talk about that. I wasn't involved in the specifics of their bids and the negotiations they had, so I shouldn't talk out of school about that side of things. I think kind of general observations, I guess, from the industry, which you'll have heard. Again, I'm not revealing anything that I learned from the business here, but I suspect there are a few theories around what the motivations were for that deal. There are a couple around playbook, actually, and obviously REA has been an amazing business in the Australian market. Could they teach Rightmove some things about monetizing the UK market, about developing the product set, about go-to-market, sales, optimization? There are also some theories about financial engineering, frankly, which again is not my area of expertise, but multiple arbitrage between Australian Stock Exchange. There's also the sort of the spectre of CoStar, which I think has rattled a few equity markets around the world, and there are people who are skeptical about CoStar's ability to really disrupt the competitive dynamics in some of these markets. But after it bought on the market in the UK, and it made a lot of noise about how much it was planning to invest in that business, I think that did sort of rattle the equity markets. And again, some people's perception was that Rightmove's share price took a bit of a dip, and that wasn't actually justified given how resilient that business has proved to be over a decade. So I think those were some of the so it could have been an opportunistic move for that reason. Those were some of the sort of theories, I guess, behind the motivation. I think probably more interestingly for the industry as a whole, when you take a step back and reflect on, what has the philosophy behind M&A been in the property portal space, and also, I guess, the classified industry more broadly. We've obviously had a long history of consolidation within specific countries, which has very obvious rationale. So you look at what's happened with the Swiss Marketplaces Group, Switzerland, what EQT did in combining Casa and Idealista in Italy, very clear rationale for those sort of moves. You've also had some kind of big national champions in developed markets expanding overseas and picking up assets in, I guess, smaller or earlier stage, higher growth territories, which is something that REA have done themselves in parts of Asia, and other businesses like Seek have also done outside of their home territory. I guess what's interesting about the attempted Rightmove acquisition, and also potentially you could draw parallels with what AutoScout have done, backed by H&F in acquiring Trader Canada, you could see that as a signal that some of these very leading stars of the market are starting to think about building constellations of leading players across markets, not just markets that are sort of geographically adjacent to them, but actually just picking off the stars around the world and exploiting playbook or potentially real synergies around technology as well. You could take a completely different view, though. Actually, if you looked at the other big M&A story of the last year, which has been the ongoing breakup of Adjacencies, again, there's someone who's taking a very different view in terms of the private equity consortium actually taking apart a big established group and selling off pieces of it. So really interesting in terms of what the implications are for the next wave of M&A in this industry.
Can we, you brought up, I'm writing some notes here. I've got some super interesting questions to dive into here, right? So when you look at, where do we start? Let's start with, let's just start where we started then, Rightmove and REA. And I just want to talk at the strategic, theoretical level. No, please not dive into anything you can't talk about. Do you think that the right answer was reached at the end anyway? And the question is, what was the right answer for Rightmove and what was the right answer for REA?
I don't know if that might be one I'll have to skip, Simon. Sorry.
Okay. Well, no, I'll give you a perspective on that, because if you look at the share price movement of the two companies, because that's the best indicator, right? At the end of the day, it's the return to shareholders. REA's share price has gone up about 20%, I think it is, since it broke off conversations. But Rightmove's share price has diverged away and actually decreased over time. And my hypothesis would be that REA, it would have been a mistake to go into the UK, because I don't think this I got a playbook that works in Australia, I can apply it in the United Kingdom and it's going to work. I think that's built around ego more than anything else. The only reason I'm going to say that is I did it when I was at REA and we bought Property Finder. And through that process and shuffling backwards and forwards from Australia to the United Kingdom, I learned very rapidly that although the underlying business model is the same, that people buy and sell houses and there are real estate agents and they operate exclusively with the listings, there are so many differences, subtle differences in the market that make it hard to execute. So that was sort of why I think they dodged a bullet, because they would have bought an asset and then I think they would have found it become an anchor, because the expectation set in the market would have been too high. I think Rightmove should have taken the deal, because I think because the problem with Rightmove is, what do you do? And maybe strategically you weren't acting for Rightmove, so you could actually have a perspective on Rightmove. What if you were Rightmove from a strategic perspective? What would you do now? You got CoStar, you've got, you're the dominant player in the United Kingdom. Commission rates are 1%, but you're making a great return.
Well, there's a lot to unpack there, and I probably will avoid commenting on, my interpretation of whether it was the right thing to do or the wrong thing to do for REA, just out of respect for them as a client. Generalizing though, your question around, does it typically have a successful outcome or unsuccessful outcome when portals expand into other markets? Clearly, I completely agree with you in the sense that often the underlying structural differences and also cultural differences between property markets is underestimated. We saw that with Purple Bricks in the sort of hybrid agent space trying to invade states in Australia. The kind of countries that we've talked about in this conversation, Sweden, Australia, the UK, US, they're just massively different in terms of structural dynamics. But that's something which businesses like REA are extremely conscious of, and they're very sophisticated, and they understand these things, and they understand they need different strategies for different geographies. In terms of what do you do if you're Rightmove, I mean, what they are doing is that they are, I think, again, we're not working for them at the moment, don't know them well, but it seems like they are doing a bit of a renewed investment in adjacencies, in international, in commercial, which again is the obvious thing to do in their position, trying to expand the addressable market, as all of these markets are seeing a little bit of slowing tailwinds in the underlying sort of core. That's what we're seeing most of these national champions do across the world.
How about vendor paid advertising? So I promise this will be my last question on the whole Rightmove REA thing. as I understood it, and I could be completely wrong, and you may not know, and you certainly can't tell me, I imagine the thesis went something like, we think we can make vendor paid advertising work in the UK. Now, regardless of that, regardless of whether that was their thesis or whether it was ever going to work, is vendor paid advertising a model that you can see working in other markets? Now, we have spoken a lot on this podcast about how you can't take a business model from country A to country B. However, I actually just got off a call 20 minutes ago with a consultant who was, I can't name the consultant, and the consultant couldn't name the companies, but this consultant was helping several real estate portals in Europe try to get into vendor paid advertising. So real estate portals are clearly interested in vendor paid advertising, even if that's not how their market works traditionally. As a strategy consultant, is it a model that you can see expanding to other markets?
I think it's hard. I think the recent wisdom is that it's very hard to flip a very established market from agent pay to seller pay, even if you're a strong number one portal. I think there's a whole load of kind of cultural resistance to that from the point of view of sellers. Agents have some understandable concerns as well around that. So I think we'd sort of see it as quite hard to flip the market towards a completely different sort of payment model. But there's no reason to see why. There's no reason why that that shouldn't be sort of explored at the margins.
I got a question. You talked about adjacencies just before, and you talked about Rightmove going into commercial and international more deeply, and let's explore those two for international, right? So if you're Rightmove, and you have Rightmove overseas, and you've had that for a long time, I think I haven't seen numbers for a very long time, but it's sub 5% of revenues. It's not massive, as far as I remember. Can you really make that into a meaningful business, do you think? I mean, we've recently had the sale of Kira, which was a UK-based company that handles these sort of cross-border. How do you think about that?
Yeah, I think that, again, in general, these adjacencies are not getting to 20, 30% plus of revenue for these portals. But at the kind of margins that some of these portals make, even an additional 5% of revenue is extremely helpful, particularly if it's they've got some ongoing growth and it expands the addressable market. So I don't want to claim that they could be massively transformative. I think the evidence in terms of what people have achieved across the world, from things like mortgages and commercial and international, suggests that in combination, you typically sort of cap out at maybe 15%, at top sort of 20% of your total revenue, typically from these sorts of things in aggregate. I think there are a couple of things which have slightly fallen out of fashion, thinking back, Simon, to the sort of conferences that we used to participate in together a few years ago, where there's a lot of hype around getting closer to the transaction, a lot of hype around iBuying, which certainly has sort of fallen out of fashion slightly. I think similarly, there have been some well-documented failures in things like trying to combine utilities or financial price comparison services with property portals, the Zoopla Uswitch combination, which didn't quite work out as expected. I think there are some like mortgages, which are still being pushed by most portals around the world. It's really hard. It's quite slow progress. I think the Holy Grail of kind of, the majority of consumers being able to apply for and have a pre-approved mortgage end-to-end online without human intervention is really, really hard for all sorts of tech integration and compliance hurdles, which again are quite different across different geographies. But again, everyone is sort of pushing that, sometimes with a very light touch proposition, sometimes really extending across the value chain. And then we've seen things like monetizing the consumer with the successes that ImmoScout in Germany have had with sort of tenant plus and landlord services as well. So rentals, I think, is a really interesting space where in the last few years, as the sales markets have been a little bit tougher given what's happened with interest rates. Actually, the rental markets in lots of countries we work in have been really quite strong. and tend to be more resilient across the cycles. And again, that's caused some portals to sort of reinvest in rentals, which can be a bit of an underloved space, and develop a whole load of services around landlord, letting management companies, software, tools, tenant verification services, all sorts of things to try and extend in that kind of area. So there are lots of adjacencies that people are pursuing, and it's a really interesting and active space, but I share your skepticism in terms of the overall materiality.
Yeah. So let's play that out, right? Let's assume that you go down the path of doing adjacencies and you bump up, maybe 10, 15, 20% of revenues, you sort of move in that area, but you're still highly reliant on the traditional pay to list model that most of the major players have. How much juice is in that lemon? How much can you keep squeezing and squeezing and squeezing? That the core model, the core part, this sort of 80% that we're talking about. I mean, at some point, there's no more to squeeze. Now, we understand in the Australian context, you're not squeezing the agents, you're actually squeezing the advertiser. But in the rest of the world, where the agents are actually paying the money from their commission, are we reaching some sort of roof in that? Or do you think there's still a big way to go?
Well, I think the way we think about it, there are a few layers of kind of growth that you get in the core marketplace business. One of which I agree, the sort of tailwind of, I guess, offline to online migration has played out in most markets. So that means that all of the buyers and all the sellers are effectively kind of matching online for properties. There isn't a huge amount of money left in print classifieds, for example, and other offline media. There's usually still 10, 15% in some of those kind of categories, but the majority of the money and eyeballs are already online. So that is a tailwind which has played out to a large extent in terms of just sort of online penetration. There's another one around take rate. So what is the proportion of the, let's say, agent commissions that is being extracted by the property portals? And again, there's a variety of take rates across markets that you guys will be familiar with, but again, they're overall still quite low. So they're typically ranging from 3 or 4% in some fairly undeveloped markets up to 10% in very highly monetized markets. So that's still agents giving away 10% of their commission revenue. Is that a lot? When will that cap out? I think the jury's still out. These portals are still...
Just clear, are you talking about, Toby, you're talking about 10% to one portal, like a Rightmove? Or are you talking about 10% to an industry?
Yeah, industry worldwide, yeah.
But what is a fair number then for an agent to give away from the total commission pool that they actually earn?
There are a couple of interesting things there. I mean, first of all, agents don't like it when prices go up, right? And there are lots of markets where the temperature can be quite high, and they're sort of seeing the portals raising prices every year, and they don't like that. The other counter argument is that when you go back 15 plus years, there are some markets where we run the numbers and you can see that agents were actually spending a higher proportion of their commission on marketing as a whole. They were just spending it across lots of different channels, flyering, leafleting, outdoor campaigns, a lot of money in print classifieds, and now it's a bit more concentrated within the portal themselves. And then also you can make arguments around, well, it's not just sort of providing buyer leads, there's also providing seller leads and a whole load of other ways in which the portals would claim they are making the agents' lives easier by providing some simple tools, by providing market intelligence, by providing broader marketing services, not just supplying buyer leads, but also sort of marketing the agency brand. So that's the argument that the portals would make, which I think does have some merit. So I think the jury's still out in terms of where you really start to cap out in terms of overall take rate.
Okay, I got another related question. So if we talk about these adjacencies, and you mentioned there that CoStar coming into the market has put the fox in the hen house, everyone's sort of a little bit worried about what's going to happen. What's your take on all of that? On what CoStar is doing, and whether you think there is a true opportunity here, or do you think it's just noise, or is it something in between?
Well, I guess, Simon, what gives us skepticism is that particularly where you have markets with highly entrenched market leaders, where people have tried to disrupt them for 10, 15 years, and the networking effects are extremely strong in property portals, as we all know. The received wisdom would suggest that it's quite hard to disrupt competitive position. It would take many, many years of spending a huge amount of money on marketing in order to really change the competitive dynamics materially. And a business like On the Market, for example, doesn't have a good competitive position at the moment. Now, is there a world in which they spend irrationally for 5 years on marketing and price discounting, and Rightmove have to respond and neutralize that threat with their own additional spend on marketing and discounting, and that causes them a load of pain and causes them to give away a load of EBITDA margin and disrupts their stock price? That's a scenario that you could sort of model through. Do we think that it's likely to change the relative market share of the players in the UK? Again, I think looking across markets and the empirical evidence, what's happened in Auto Trader UK, for example, with lots of entrants over the years trying to disrupt that market, it's I think you'd say that the evidence suggests that it's quite hard. Now, the difference this time is that CoStar is an absolutely enormous business, and they've clearly been very successful with Apartments.com in disrupting historically the rental space in the United States. And there are lots of companies which, for periods of time, don't act in a way that we would consider to be rational, and some companies do just take a much longer term view than, for example, a private equity investor might. So I'm not trying to completely discount the threat, but certainly based on the UK's competitive landscape at the moment, it feels like it would be quite hard for them to disrupt the competitive dynamics significantly.
What about in the US? Because there's a completely different business model in the US. So my admittedly quite simplistic take on the UK is it's a lot harder than the US, right? Because in the UK, you haven't got a very compelling difference for the customer or for the person using the real estate portal. It's the same thing On the Market and Rightmove. Whereas in the US, Homes.com has a different business model for the agents, and it has a different proposition for the user.
Yeah, I've got. That's probably one I should skip because I've got a live project on in the States and in and around the space. I'd probably skip over it. Sorry about that. Sorry to be boring.
No, fair enough.
Yeah, I do agree with you, Ed. It's a bloody complicated market. It's a completely different structure.
Oh, it's completely different because everyone's got access to all listings. So
in sales, yeah, and then in rentals, you've got Apartments.com, which is basically serving property management companies, and then you've got Zillow, which is sort of still single family homes, agents. It's a very complicated space. I don't think the lessons of that translatable to the European markets that we all
No, they're not. I don't think they're translatable to anywhere in the world. I mean,
yeah,
it's just such
an anomaly,
unique.
Isn't it? Yeah.
And it's an anomaly. A 6% commission, a MLS environment, agents to agent commission structure is very hard to disrupt. It may not be considered fair. You've got the government weighing in with not legislation, but anti-competitive acts, and I think the NAR had a few problems there, and so on. It's just not comparable. But I do have another question, another European-based question for you. There's sort of two different strategies here, from these major buyers or owners of portals. You've got Aviv and Adevinta. Okay. So on one hand, you've got Adevinta, which seems like it was a holding company and all these different businesses are operating separately, recently been taken over by Permira and Blackstone, whoever it is. They basically said, well, Kleiner Seiden, you operate independently from Photocasa, from so on, grow. And as you get to a certain point, we'll sell you off. So we sold off Distilled in Ireland, back to a joint venture of the original owners, and so on, right? So you go down that path, but it's like you're out there by yourself. Here's some cash at the top if you want to do some acquisitions or to ramp up the business, but go. Aviv seems to have gone the other direction, which is like common technology platforms, trying to centralize far more. So there's the centralized versus decentralized approach. What's your view on that centralized versus decentralized approach?
Yeah, it's really interesting. So in the case of Adjacencies, obviously it was a bit of a U-turn in terms of the philosophy that the consortium sort of implemented when they took over versus the previous management, which had been pursuing tech integration across parts of the Adjacencies group, as you know, not all of the group, but some of it. And like we were saying earlier, there are businesses like AutoScout as well in the car space, which have got a common platform across lots of different markets in Europe, and they've bought Trader Canada as well. So I think people have a different philosophy on this, and I don't think it's been proven to be one answer's the correct one and one answer's the incorrect one. There are clear rationale for putting portals on a common tech platform, particularly when they're the same vertical across lots of different countries, enables you to obviously save costs and enables you also to deploy product innovation much more rapidly across multiple markets at the same time. I think the experience of Adjacencies shows that it's maybe harder than it looks on paper. It takes many years. It takes a lot of money. So I think the jury's a little bit out, and it probably comes back to different ownership structures. Probably choose different approaches based on what their sort of outlook is in terms of their time horizons, their investment horizons.
Yeah, I'll give you a different. I think that from my perspective, I think it's clear. I think when you try to go to a common platform, and I'll take two examples. One is the Lamudi approach. Right? Remember, Lamudi started off as a subsidiary of Rocket Internet out of Germany. Said we're going to all these markets, and we're going to go. And they basically built a platform, and then they went to, I don't know, 30, 40, 50 markets. It was an enormous number. Okay. And what they discovered was that's all wonderful in theory. And I've chatted to the guys there, Kian, and I can't remember the other gentleman's name now, over the years. And what they realized was that while you could have a consistent underlying platform, the local customizations were actually quite numerous. And what it led was that you're sort of going into a boxing match with one arm tied behind your back, because the local players, they don't care if you're in Indonesia, Lamudi Indonesia, they don't care what you've done in the Philippines. They're just fighting you in Indonesia, but you're trying to run a platform that works in the Philippines. Oh, and by the way, in Africa and somewhere else. And there's all these little subtleties. And I think what happens is that's a good example of where it all didn't work. And now you're left with Lamudi in Mexico, which is owned by Life Connect, and Lamudi in Indonesia and Philippines. These are the three left that are owned by DCG, the Digital Classifieds Group. Okay. And I think that the lesson learned out of that is that this concept of one size fits all doesn't really work. I think Frontier Digital Ventures sort of had similar concepts, and it ended up just being a holding company for all these different investments around the world. And they're trying to move to a consistent platform just in Latin America with 360 LATAM. And really recently, and I did a podcast with Ricardo, who's the CEO there. And their model has changed dramatically from what it's in other markets. And I think that the bigger issue is that's when you're starting from scratch. But when you're Aviv and you've acquired Celiger with technology deficit of 25 years, ImmoWeb, which is, I don't know how the Christoph created that, and I don't remember how Christoph I don't remember how old that is. It's got to be 20 years. Okay, and had a couple of owners. And how do you move to a common platform with, and the issue is not the theory. The issue is the egos of technologists. Okay. And you're trying to literally herd cats who've all got their own perspective on what needs to get done, and try to get them to agree on a common platform. So you end up with being, something that works for everyone, but it's not actually relevant for anyone. If that makes sense. And you open the door for the competitors to march through. And I think it's, if I was in these shoes, I think they've been, I don't know, how long has Aviv been doing technology? I mean, probably you can't answer, but I think it's like 3, 4, 5 years now. They've been trying to move to a common platform. And is it really going to be worth that effort at the end of the day? Are you truly going to be much further ahead in, say, 5 years' time, which is a true test, than you would have been if you just allowed each of these with the same amount of investment to run individually? And then, of course, how do you then break it up? Because let's say inevitably Aviv goes the way of Adevinta. How do you go, well, who would like to buy Centralized, sir? Right? And there's not a lot of buyers for multi-country positions. So you've got to then say, well, I could find a buyer for Seller's Share. Oh, wait a second. It's the technology platform so integrated I can't sell the damn thing or easily sell it. So I just want to, I'd love your thoughts on that.
I hear you. Look, I think what you said is pretty compelling, and I'm sure in many instances is completely right, particularly the last point when you're thinking about breaking up these groups. I guess you can understand people taking a different view under a few different conditions, right? If you're trying to build a pan-European car classified group in Europe, say, where actually there is an element of cross-border, where the markets, you could argue, the underlying structural dynamics of the markets are a bit more homogenous across Western Europe than they are in some of the more sort of further afield examples.
But I can buy a car in Germany and then drive it down to Spain, register it there,
yeah,
and use it. I can't take my house in Germany, drive it down to Spain, and use it there. So I think,
yeah, I understand.
So I can understand. Yeah.
The other one, which is why I think there's probably more rationale in marketplace categories outside of property. Well, that's part of the reason. I think the other thing is, in a world where the portal's role is still primarily brand and marketing and local sales force and relationships. Again, what you say, I think your theory, has a lot more justification behind it than some other marketplace categories where actually the portals are developing slightly more elaborate software propositions. And again, if you've got job portals that are going into all different pockets of software and tools and other services across the value chain, you can understand the temptation of saying, well, hang on, we're not going to develop these pieces of software multiple times for multiple different markets. We do need to have a single technology platform. But I think in the case of property, as you mentioned, I think your argument's pretty compelling.
So as you could probably tell from the conversation there, the interview with Toby went on quite a bit. There was some pretty interesting stuff that we got into the weeds with. So what we're going to do, Simon, is we're going to cut this episode here and we'll pick it back up in next week's episode.
And just for anyone out there listening, the second half is fantastic. We go really deep into the future, about what could be with AI, and a range of other topics that I think are absolutely compelling listening. So I'm looking forward to that session, and I hope everyone out there will